Most scalpers are looking for an exact reversal point on lower time frames. But the real question is, can a simple combination of a reversal signal and divergence really work well on a 1-minute chart? Today, we are not just going to introduce this strategy. We are going to backtest it on historical market data and see what the real result will be. In this test, all positions are checked according to certain rules, both successful and unsuccessful trades, because our goal is to find the real result, not just show the best examples. The entry rules are simple. For buy trades, we wait for a bullish AlgoAlpha reversal signal with confirmation of a positive RSI divergence. For sell trades, we check the same conditions in the opposite direction. After that, we check each signal on the chart and record the result. In the AlgoAlpha settings, set the inputs confirm within section to 5, then uncheck the use volume confirmation box below it, and set the trend map period to 21 and the EMA step to 34. The settings for this indicator are okay now, but next, just change the RSI to 9.21. That's it. Let's go to the backtest. Don't forget to like and subscribe to the video. You give me energy with this card. Let's go fast. For this backtest, we use the 1-minute time frame and check all the signals that appear according to the rules of the strategy. The goal is not to show only successful trades. All positions, both winners and losers, are counted in the final result. First position, long setup. Well, the first position we will check is a buy position. In this part of the chart, the price, after a short downward movement, starts to show signs of weakness in the trend. AlgoAlpha reversal signal issues a bullish reversal signal. But to avoid hasty entry, we will not be satisfied with this signal alone. Here, the RSI has also formed a positive divergence, which indicates that the strength of sellers is decreasing. The final confirmation of the entry is the closing of a bullish candlestick after the reversal signal. The price is also near a range that could trigger a buyer reaction. With these conditions fulfilled, we enter a long position, and now we check whether the reversal has been able to continue or not. As we can see, the price starts its upward movement after the entry, and this trade ends with a positive result. Second position, short setup. In the second position, the market enters a phase after an upward movement when the power of buyers decreases. At this point, the AlgoAlpha reversal signal issues a bearish reversal signal. In addition, the RSI has formed a negative divergence, which indicates that the price is not able to continue the upward trend. For further confirmation, we wait for the closing of a bearish candle to see if the sellers have really taken control of the market. After receiving this confirmation, we enter a short position. But this time, the market does not move as expected. The transaction has hit TP. This example shows that even when several confirmations are placed side by side, there is still a possibility of failure, and therefore the final result should be checked with a large number of trades. So in this section, we find a new position on the chart. Before the signal, the price had a clear movement in one direction, and now there are signs of a decrease in the strength of the trend. Position 3. The AlgoAlpha reversal signal issues a reversal signal in this area, but we do not rush to enter. We check whether this signal is consistent with other conditions. Here, the RSI has created a divergence, which indicates that the momentum of the previous move is weakening. In addition, the candlestick after the signal was able to confirm the initial market reaction and show that the probability of a reversal has increased. With these confirmations completed, we enter the trade, and now we only follow the price movement after the entry. Furthermore, the price reacts appropriately, and again, the trend will be right on trend. This position is one of the examples where several factors together have increased the quality of the signal, the reversal signal, the RSI confirmation, and the candlestick reaction. But the important thing is that in backtesting, we are not just looking for ideal positions, and we need to record all the positions that appear according to the rules, so that the final result is more realistic. Before we continue the backtest, there is one important point about this strategy. We never enter a trade just by seeing a reversal signal. The quality of this method increases when several confirmations are combined, such as RSI divergence, candlestick reaction, and general price movement conditions. These confirmations help us enter weak signals less often. There must also be confirmation of the trend so that we know or confirmation of the area that it hits. Let me tell you how. Well, let's move on to the next position. Here, the first thing we check is the price position relative to important market areas. The price has reached an area that has shown reactions in the past, which makes this area more important for checking the price reversal. After the price reaches this area, AlgoAlpha reversal signal issues a reversal signal, but it is not enough to enter yet, and we wait for further confirmations. Furthermore, the RSI shows signs of weakness in the previous trend and divergence has formed. At the same time, the confirmation candle also shows the price reaction from this area. Now, three important factors are combined: reversal signal, RSI, divergence, and confirmation of the area. When these conditions are met, we enter the trade, and from here on, we only monitor the price action. As we can see, the price reacts well after the entry, and a reversal occurs. These types of positions are usually of higher quality because the entry is not based on just one indicator. Rather, several different factors have come together at a certain point in the market. Well, let's move on to the next position in the backtest. This time, the situation is a little different, and we want to see what happens when all the confirmations are not complete. Next part. In this part, the price after a strong move reaches an important area, a range that has caused a price reaction in the past. This area can increase the probability of a reversal, but we still need other confirmations to enter. After the price reaches this area, the AlgoAlpha reversal signal issues a reversal signal. At first glance, this signal can be attractive, but we will check whether the RSI also confirms this move. Here, the RSI shows signs of weakness in the previous move, but the divergence is not as strong as in the previous examples. For this reason, we wait for a confirmation candle to see if the market really intends to reverse. After the confirmation candle closes, the entry conditions become more complete, and we open a position. Furthermore, the price first moves a little in the opposite direction, but then shows the expected reaction and reverses it happens. This position illustrates an important point. Not all conditions need to be perfectly ideal, but the more confirmations there are, the better the quality of decision-making will be. In backtesting, our goal is not to find a magic signal. Rather, we want to examine the behavior of the strategy in a set of real trades. During the backtest, we saw that some trades, despite having several confirmations, may not have the desired result. But the important thing is that the result of a strategy cannot be judged by one or two trades. What matters is its overall performance over a large number of positions. If you like this type of real backtests and scalping strategy reviews, like the video, don't forget to subscribe, and be sure to write your opinion in the comments and tell us how we should test the strategy next.